Okie dokie, folks. Today's video is about how to afford a mortgage with $100,000 plus in student loans. That's what today's video is about because we get that question and concern all the time. The concern may be, I just have so much student loan debt, I can't even think about how I manage it, what my next steps are. I can't even plan for my life and other goals because I'm concerned about it. I'm stressed out about paying this debt. How do I have this debt and deal with all the servicing stresses and then think about getting some other loan or doing something else, right? There's a lot of stress around it. How do I just get out of this debt before I do anything else? And I want to tell you right now that stress is real, but at the same time, we can't delay living our lives because student loan debt should not hold you back. Getting an education should help us, right? And so I'm here to help you alleviate that stress because we're going to take away the stress of managing the student loans. And we're going to be here, your friendly advisor on your side, your friendly mentor, assistant, however you want to view it, to help you move from debt to wealth. I did it myself, my own personal story. I've held six figures in student loan debt between my undergrad and grad school. I was declined for my first home because of my student loans. And today, I not just own multiple homes. Let me just fix my mic here. I not just own multiple homes, but I syndicate real estate for investors now. You could turn every hardship, right, into something that holds you back and creates fear, or something that you use as an opportunity to grab life by its horns and do something about it, and not just move over it, jump over that hurdle, but thrive and then become jumping over many hurdles, right? If I want to use that analogy. So that was me. And I've essentially purchased one home or syndicated a deal for multiple homes. I've done one a year from 30. I'm turning 40 this year. Can you believe that? I've done one a year, basically from 31 to now, minus the few years I was in grad school. Okay, so I literally went to my first home in 2014 and I was told, you don't qualify. You have too much student debt. Do something about that first. They gave me very few options. So if you feel like you're in that bucket, whether it's a real denial or real concern with your lender, or whether it's just a psychological concern, this video is for you. Okay, so if you know others that are dealing with this as well, please like, subscribe, and share. Okay, I hate asking that, but it really does help get our content out there to help more people move from debt to wealth. And that's what I care about the most, not about getting the most subscribers, but helping the most people. Okay, so let's first start with if that's you, you've identified yourself in this video, right? But now let's talk about the core issues. The truth is, by the way, that lenders oftentimes do not use your actual payment to calculate your student loan for your debt to income. All these rules are different, but a lot of people are in forbearance, and will just be like, straight up, we're going to use 1% of your balance to calculate your student loans. So in the case of a person with $100,000, if that's you, or 100,000 plus, you can use this. If you have 140, you can use that number. If you have 100, I'm going to use 100 just to make it easy. Your lender will say, okay, well, $1,000 will be counted towards your student loan payment, even if your payment isn't 1,000. Let's say your payment isn't even 1,000. They'll use 1,000. That is very common, especially for outside of mortgage as well. For like auto loans, personal loans, they'll just be like, oh, you have 1,000 that we have to count towards paying your student loans, even if you're not paying it, or if your payment's $200. It doesn't matter. They'll just be like, you know what? It's $1,000. And I'm not saying every lender will do that, because a lot of lenders, in order to not do that, they have to actually look at your circumstance and scenario and decide what to count instead. And that's more work. So it's easier for them to just say, we're going to use $1,000. That's it. Call it a day. If you have 140,000, they'll say, we're going to use 1,400, which if you earn what the average American does, about 70,000 a year, and you're making about 5,000-6,000 a month, that's around what equates 70,000. After tax, you're making, let's say, 5,000, and they're using 1,400. You're not going to be able to afford very much home because they're using too much for student loans. Okay, so that's the issue with mortgage lenders. That alone, that issue will disqualify a lot of people with higher debt relative to their income. Okay. And by the way, if you have higher debt relative to your income, you're not alone. The majority of people now out of grad school programs, regardless of the program, are graduating with higher student loan balances than their first year out of grad school, regardless of the degree. It doesn't matter if you're a lawyer or a filmmaker, right? It just does not matter. That's the circumstance. So this is how we can help. I'm going to screen share a little here because I think it's very important to be able to access our tools in real time. So I'm going to share our website. This is our website. You can get started with a free plan completely for free. You just click get started. But I want to take you down to our affordability tool just to link this. It's a resource. It's an affordability calculator at the bottom of our website. You just click on it. Okay. Affordability tool. So you could very quickly estimate. Let me just double check in this video that it's sharing the right screen because sometimes it shares the wrong screen. I don't know, technology, right? So here, so let's say, for example, we talked about having around 75,000 in income, right? And let's say you have 100,000 in debt, just to make it super easy. This is meant to estimate very quickly with a lot of assumptions, but let's say average interest rate is 6.8 actually for grad school, depending on grad or undergrad. Let's say you're married with 2 kids, you have a family size of 4. The advanced settings right now, debt to income, a lot of lenders let you use 50, and let's say the mortgage rates are 7. Okay. Let's say you have a low down payment, which is the case for most people, and you can enter other debt. If you have private student loans, you can enter it here. Let's say you have a private student loan of $250. And I'm going to assume you have no car payment, which is likely untrue. But let's say your car payment. Let's just leave it at no car payment, just for this example. Okay. So what LoanSense can help you do is understand. Okay, your payment at this fully amortized amount is $1,151. Okay, let's pretend you're already in an income-driven plan. Let's say you're already in an income-driven plan, and this is why I use around the $200 examples, because if you earn around 75,000 and you have a family of a spouse and 2 kids, family size of 4, then your payment is going to be around $200. Okay, a bunch of assumptions go into this, but this helps estimate. Let's say the lender's using around 1,000, which is around this fully amortized amount. Let's down it a little just to see if it's closer. Let's say let me use 5.5%, or 5%, just so I can get it as close, or 4.8, get it as close to the 1% mark. On our lender calculator, we just let people put in payments. So let's just say 4.6, 4.4. Let me see, 4.4, 4.3. Try to get it to close to 1,000. Let's say 3.8. Which, by the way, is just unheard of, right? 3.8 is just unheard of interest rate. But let's say 3.8 because that's around 1,000. By the lender allowing you to use what your payment would actually be with the government, which is around $223, that reduction in $780 means, based on having a 30-year mortgage at 7% interest and a 3% down payment, that literally means you can afford $84,000 more house if you get this corrected. So let's say your market is one where it's very hard to afford anything you want for $202, but you could afford some starter home for $287. It is really important that you get the student loans calculated correctly. Okay. So how is it that we can do this? How is it that LoanSense can help you do this? Well, first of all, we can use several proofs of income to enroll you into an income-driven plan to take you out of forbearance. That's why they're using 1%. And let's say the prior year, 2 years ago, you earned way less money. Let's say 2 years ago, let's say you only worked part-time because you got hits from the pandemic. And let's say you only made $45,000 2 years ago. Okay, let's just say that. Well, LoanSense can actually, in this circumstance, get your payment down to 0. If it's a Fannie Mae loan, you could actually use 0, okay? And they will accept 0 for the documentation. LoanSense will help you get it. Let's say you're an FHA candidate and you can't use 0. Well, LoanSense will use the documents to get you from the prior couple years to get you as close to 0 without going to 0. So it depends on your loan product. We will walk with you on that journey to understand what documents and what payment to ultimately get. But I want to show that because there's a range of payments you can actually get. LoanSense will work with your loan officer to understand what payment you actually need to qualify, okay? And then we will get you that payment. The action you take to close on a mortgage does not have to be the long-term action you take to manage your whole loans holistically. We can walk with you as well. Hey, this is what you need to do to close. This is what you can do afterward. If you're a public servant, we can still work with you on that front to help get public service qualified as well. That does not impede or hurt you. No matter what you do in this process, it does not hurt you from getting loan forgiveness. I want to make that clear. Because a lot of people are like, hey, if I do this, does that mean I can't get loan forgiveness, or will it hurt my chances? And the answer is absolutely not. They work together to help you. So in this instance, if we got you an actual $0 payment that your servicer could use, you're literally boosting your affordability by $108,000. Obviously, this is assuming your mortgage is going to be super small, but that assumption's wrong, because for the mortgage process, they're still going to use $75,000, but this is the number to note the most, which by getting an actual $0 payment and not 1%, we're boosting your affordability by $108,000, okay? Literally, by you doing nothing with your student loans except letting us help you manage the enrollment process for the income-driven repayment plan and the public service loan forgiveness program if you're qualified. If you're not, you could still get to income-driven. And we will get you the guideline compliant docs, which are literally just the documents your mortgage lender needs for underwriting to close on the home, okay? So that is how you close on a mortgage with $100,000 plus in student loan debt. We have so many real world examples of how we help people do this. Last week, we had a nurse from Texas with $132,000 in student loans. She had advanced studies, of course. She had advanced studies, and the lender was using 1% because their loans are in forbearance because she wasn't saved. They were using $1,320. Well, surprise, surprise, she couldn't get a home with $1,320 used as her payment. She just couldn't. Well, we took her out of Save Pause and got her $174 payments using prior income. They still qualified her on a mortgage with about $90,000. We were able to use prior proof of income to get her a $174 mortgage instead of using $1,320, and that allowed her to jump her affordability significantly enough to get the house she really wanted instead of like barely being able to qualify for one. She thought that she would get denied because they were using $1,320. And she came to us right away because the lender knew about our work and we were able to get the documents. The best part is we got them in 2.5 weeks, even though the servicer said that. They basically told her, hey, try to go and roll online on your own, and they just stonewalled her, never responded. We were able to get it done. We got her documents in under the 3-week time period. And guess what? She closed on that home 6 weeks after that. The market is a little slower moving, but in 6 weeks she closed. She did move her close date because she panicked about this. She moved her close date, and she successfully got it moved without breaking the contract or anything by a few weeks, just to help manage some of the stress around getting the docs in time. And then I want to mention one other amazing resource is down payment resources. Okay, you literally can just Google, I can screen share that, down payment resources. And the reason it's so awesome is because if you need down payment savings help, what is so amazing about this site, which I will screen share right now, is that you can search for down payment programs in your area. You can just go to For Home Buyers. It's free to use. And you don't need 20% down, right? That's like a myth. You can see all the different down payment programs in your area. That's pretty cool. So you could make it a specific address or county or neighborhood. Let's say, in my instance, let's say Ann Arbor, Michigan, right? Ann Arbor, Michigan. Let's do it. Charter Township in Washtenaw. Let's just do this. single family, let's say the estimated purchase price is 250,000 or 220,000. I don't know. It could be, it's around there. You could buy a house, maybe not in Ann Arbor, but let's just say it's around that. Let's say it's just like a single family condo kind of thing. Maybe you can. I haven't looked at that market specifically in a bit, but look, they're already telling you match programs, right? Let's say it's me and two kids again, using that same example, even though I personally only have one son, but that's the example. Do you currently own a home? Let's say, no, I never owned a home. Okay. What is your annual income? I'm going to use that 75,000 again. Current, are you or your co-borrower any of these things? Let me just put no. Let's just say yes. Let's just say my spouse is a veteran, just to see what happens. Is me or my co-borrower American Indian? I'm going to say no. And then let's say I'm a public servant. Let's say I work in healthcare, like the nurse scenario. And let's say I don't have a dependent that has a disability. Let's just see what happens. Okay. So look, there's all these amazing programs. Federal Home Loan of New York. Look at this. Home Buyer Dream Program. The Federal Home Loan Bank of Des Moines Home Starter Program. Habitat for Humanity of Michigan Down Payment Assistance. These are pretty awesome programs, right? Look, let's see what else. In order to see more, I have to enter my info, which I'm not going to do for this video, but you get the point, right? There's 12 programs that they want to show us. There's 12 programs here. I hope you saw that. Oh my goodness. Sometimes I wonder, walking through that, if it was seen, but they show us 12 programs. I'm just going back a little in case it wasn't seen. You just enter a few pieces of information called downpaymentresource.com. I will link it in the video below. But the idea is you enter in a few pieces of information and they show you what down payment resources. And it's always really good, especially if you're starting the home buying process, you can even click view results. And they want you to enter your info before you can see it. But I want to say Michigan, especially the Midwest, there's a lot of great, amazing down payment programs. It's really, if you're about to start the home buying process, it's really important to understand what your options are and what your income limits are for qualifying for these programs, because if you need down payment assistance, they're just incredible, right? So if you've been told you don't qualify for a mortgage, or you just have not tried because you're concerned about the level of debt you have, just understand that should not hold you back. Check out our tools. We will link it below. We will link to down payment resources as well, so that you can discover appropriate down payment programs along with what your true affordability is if you have 100,000 plus in student loans. If you know other people who can benefit from this video, please do not hesitate to share, like, and subscribe.